All right, folks, it looks like big banks have started to change their mind about crypto. We're going to go into the biggest one of them all, JP Morgan. Remember, Jamie Dimon hates crypto. He wants to rip crypto's beating heart out, but it looks like his company is going to submit to the crypto empire. And they're looking at new crypto services. In essence, they're going to look and explore at the possibility of lending against a client's cryptocurrency holdings. So they're letting their clients collateralize crypto, probably at 2 or 3 times the value, in order to take a loan. Now, this is a big move for JP Morgan because JP Morgan reportedly hates crypto. That's 100% true. This marks a significant shift in the bank's stance on digital assets, particularly given CEO Jamie Dimon's past criticisms of Bitcoin. The move is seen as a sign of the increasing mainstream acceptance of cryptocurrencies and could accelerate their integration into traditional finance. Targeted launch, JP Morgan plans to offer these crypto-backed loans potentially as early as next year. Though the plans are subject to change in regulatory approvals, the initiative reflects a shift in Dimon's view as he now acknowledges the importance of providing crypto services to clients. Now, I personally don't think it's a shift in Jamie Dimon's view. I think it's just reality, and he's basically bending towards reality. Here's what I mean by that. I mean, other countries like Wells Fargo, PNB, which we're going to talk about later, have basically started to offer crypto services. He might be losing clients because of his own views. And obviously, he views the profitability of his company and the survivability of his company, obviously, more than his own views on crypto. So he's kind of being pushed in that direction. Regardless, it's a big step that JP Morgan is looking basically to step up its crypto game. Initially, the bank allowed clients to borrow against crypto exchange-traded funds or ETFs, which they think are safer. The current exploration extends to use actual Bitcoin and Ethereum holdings as collateral for loans, which is excellent. The bank's move aligns with recent developments in the regulatory landscape, including the passage of the Clarity Act and the Genius Act, focused on stablecoins, which provide a clear framework for banks to engage with digital assets. The initiative is likely driven by growing institutional and high net worth client demand for crypto exposure and the desire to leverage their holdings without selling them. JP Morgan will need to address challenges related to managing crypto collateral, particularly in the event of loan defaults. To mitigate risks, the bank is expected to partner with third-party custodians like Coinbase for secure storage and management of crypto assets used as collateral. JP Morgan's exploration of crypto-backed lending is part of a broader trend among financial institutions adapting to the evolving digital asset landscape and the client demand for crypto-related services. So we know that their major clients are demanding crypto-related services. That is a big indicator. This move could significantly impact the crypto lending market, potentially attracting more institutional investors and increasing the overall adoption of digital assets within traditional finance. So obviously, crypto is exploring deeper and deeper into traditional finance. It's a big step for JP Morgan to do this because obviously their CEO despises crypto and basically wishes it doesn't exist. He thinks crypto is a big tulip Ponzi scheme. But reality and his company isn't really giving him a choice because he doesn't want to fall behind in the crypto game. So, they're not the only ones that are actually in this. PNB today is announced a partnership with Coinbase, and they're launching a crypto wallet for any coin. So, I think this has to do with the Clarity Act, and it does. And of course, the Stablecoins Act. And they're essentially going to, provide their own wallet service. Now, when Gensler was back in charge, there was a lawsuit against, crypto wallets. And obviously, big banks didn't want to get involved in that. But now, since that's gone, they're wanting to get back in this business. So the 6th largest bank in the U.S. just announced a strategic partnership with Coinbase in a push to massively expand digital asset access. So obviously, PNB has lots and lots of customers, and opening them up to a crypto wallet could onboard a lot of rich people into crypto, which could pump our market. Even if they don't buy spot Bitcoin, they could buy Bitcoin ETFs. And that could definitely pump the market. So now PNC holders will be able to buy, hold, and sell Bitcoin and crypto assets while also providing banking and treasury management services for Coinbase. The teaming of those big giants just basically shows that crypto is on a new level now. This partnership brings together PNC's legacy of client service and innovation with the institutional grade infrastructure of Coinbase's crypto as a service platform to power secure, scalable crypto access for PNC's clients. The PNC and Coinbase will work together to develop an initial offering that will allow clients to buy, hold, and sell cryptocurrencies. PNC CEO Bill Dimchek tells CNBC the partnership will support clients who use stablecoins for payments, empowering digital money movement across retail. Now, once again, it is mostly about stablecoins, but it will be able to hold other cryptos as well. And obviously, like getting people onboarded to USDC and USDT will help facilitate the smooth transfer into cryptocurrency investing. Because at especially a lot of DEXs and other places, you can only buy crypto with USDC and USDT. Well, now since you already have USDC and USDT, it's going to be easier for people to use those services. And the major banks sooner or later will want to partner with exchanges to offer crypto trading and crypto financial products. So that will give us a huge boost in terms of new investors. So that actually might be one of the triggers that we're actually looking for. Basically, speaking of wallets, Ton Wallet has actually gone live for Telegram users in the US. Now, I still wouldn't buy Ton because it's already pretty high market cap right now. I think it has a decent future, but it looks like Ton's actually finally gotten out of some of the regulatory conundrums that it was in, stretching from back in 2018, which is Trump's last term. So Telegram rolls out Ton wallets to US users, enabling self-custodial crypto transactions, DeFi access, and off-ramp features within the app. Telegram began rolling out its native cryptocurrency wallets to users in the US, marking a significant expansion of its blockchain-based services built on the open network Ton blockchain. The Ton wallet is the first self-custodial crypto wallet to be integrated into a major social platform available to US users. According to a Tuesday news shared with Cointelegraph, so this is from Cointelegraph, it's supported by the Ton Foundation. And obviously, Ton was one of those first companies that actually lost a lawsuit with the SEC. Ton was actually declared a security back in 2018 or 2019. But it looks like they've kind of worked through the legal loopholes. And with this new and way, way more lenient SEC, I do think Ton is going to make some headroads. With access to the Ton wallet, American users can now interact with the broader Ton ecosystem, which includes a variety of applications ranging from gaming and payments to decentralized finance and digital marketplaces. The integration allows users to explore blockchain technology without leaving the Telegram interface, the company said. Ton Wallet allows users to transfer USDT, Toncoin, and other Ton-based tokens, including non-fungible tokens. Transaction functions similarly to sending a regular message, and users maintain full control of their private keys through the wallet's self-custodial design. So very, very big move for Ton. I think this will make Ton a more attractive crypto to invest in for US, but it's already a pretty high market cap. Pavlov Durov, I think, is getting off his own legal issues, so that will actually help Tron as well. So, I mean, the US has always kind of been a target for Ton expansion, and they're finally coming in. Telegram is still a really, really popular app, a lot of users, and it does actually have the base that a lot of projects just don't really have. So it might be a new look for Ton investment. I don't think I would buy it just yet, but Ton should be coming up sooner or later. Western Union is getting back into crypto, but it's kind of just getting back into the stablecoin race, which goes to show you that they did actually dabble with a little bit with XRP. Well, rumored dabble with XRP before, but they're actually really interested in stablecoins. That should tell you that the cross-border situation is basically completely falling into the stablecoins lap. And they might work with RLUSD, but most likely USDC. So Western Union is exploring stablecoin integration for cross-border transfers, conversions, and digital wallets, positioning it as an innovation opportunity. Western Union is exploring ways to integrate stablecoins into its services as the firm seeks to modernize cross-border payments. During a Monday interview with Bloomberg, Western Union CEO Devin McGrechnan said that the company views transactions as an opportunity, views stablecoins as an opportunity. He also said it is exploring partnerships with major crypto industry players after stablecoin on-ramp and off-ramp services, as well as a digital wallet. We see stablecoin really as an opportunity, not as a threat. There's no reason for Western Union to see stablecoins as a threat because it's not really a bank. And it does actually give them the opportunity to transfer money at a faster clip, which would actually give them an advantage on banks. They're obviously not new to crypto. They've been trying crypto for remittances as far back as like 2015 and 2018. A lot of XRP rumors there, but it looks like they are going for stablecoins. Obviously, the reason for this is because the Genius Act that just passed actually provides clarity and a lot of leniency for stablecoins. So they're looking at this as a new opportunity, and I don't think they're going to be the only asset that does so. The U.S. Senate has unveiled a new cryptocurrency regulation proposal. The House kind of did its job, so the Senate's now doing their thing. I think this is on top of what's already been passed. The U.S. Senate releases a draft on a new cryptocurrency regulation. Regulatory clarity aims to enhance innovation, potential institutional shifts in digital asset markets. Senators led by Tim Scott and Cynthia Lummis introduced a cryptocurrency regulatory framework draft on July 22nd, 2025. The proposal aims to clarify existing laws potentially influencing asset and markets by defining regulator roles and boosting investor confidence. Now, I hope the regulator roles are a little bit bigger. I think crypto has gotten a little too loosey-goosey, and some things do actually need to be controlled. So Senators Tim Scott, Cynthia Lummis, Bill Hagerty, and Bernie Moreno circulated a draft bill intending to revamp U.S. cryptocurrency regulation, emphasizing token classification and decentralization. The draft aligns with precedents like the Clarity Act and the Loomis-Gillibrand bill. The draft enhances clarity on roles for the SEC and CFTC, including institutional participation by setting reporting and custody standards. Market reactions remain cautious as the bill aims to prevent innovation from moving abroad by providing robust consumer protection. So essentially, they don't really want the companies to go outside the United States to start businesses. They want to retain American business interest. I think it's going to be like more restrained on the SEC and the CFTC. And I think the heads of both those administrations have kind of accepted that they are going to be more restrained when dealing with crypto. They're more of the pro-business, pro-innovation as well. So I think this just kind of like clarifies that. And I don't think there's going to be any major issues. I don't think there's going to be really any major issues with the Senate actually kind of like proposing this. So obviously, as a response to maybe that and maybe the Jerome Powell firing, which is a complete non-issue because he's not going to get fired, Bitcoin has actually moved higher to 119. A lot of people are looking at, is this going to be a new all-time high? That I can't really comment on. We've been stuck around 120 for a long time. The MACD, like I said yesterday, is going slightly negative, but that's kind of irrelevant because back in November when it went negative, we still went up for the next 2 weeks. And if you look at the 50 and 200 EMA, they're not getting closer. In fact, they're getting slightly further apart right now. So I still think we have some time to actually pump. Obviously, we got to be careful because Trump has those tariffs coming in August 1st. And I don't think he's going to make any kind of trade deal with Canada, Mexico, US, and the EU. And those countries do account for roughly about 70% of US trade. And obviously, he's trying to play hardball. He's got like some kind of deal with the Philippines right now, but it might actually tank the markets if he does not back off and if the other countries don't really make a deal by August 1st. So that's the thing that we have to look out for. Obviously, even though we're less than 10 days away, people still think he is eventually going to back down and we are going to get a better relationship with our trading partners. But he actually wants like high baseline tariffs, which actually would force retaliatory measures by trading partners. Europe specifically has this thing called like the European Trade Bazooka. I know it sounds dumb. It does sound really dumb. But that is basically something that restricts suppliers of U.S. like company suppliers from Europe, as well as imposing counter tariffs. And I think most of the powerful countries in the bloc do want to enforce something like this, or at least they want to propose like counter tariff measurements. Right now, the two sides are very, very far apart. And I don't think the European Union or the Commission is going to accept like a baseline of close to 20% tariffs, because that really doesn't make any sense for them. I think like, and part of it, I think like both Canada and Europe are kind of like getting tired of dealing with the US. because, like they're not really honoring like prior trade agreements, especially with Canada and Mexico, because Trump in his last term did sign our last trade deal with Canada and Mexico, and he's obsessed with not letting the U.S. have any kind of trade deficit with any country, which doesn't really make much sense considering like how much U.S. companies need and like how much U.S. consumers consume. The only way you're going to get that is you convince U.S. consumers to like stop consuming so much. And anyone who tries to do that is going to be out of politics very, very quickly. You do not want to attempt to change the habits of U.S. consumers. That does not play out very well for any politicians whatsoever. So yeah, I think we're going to be stuck in the trade mire for a while, but I think people have also adjusted to it, and people just assume that he's going to chicken out. But like I've said before, that is a very, very dangerous and stupid game. And this time there is a chance that he is not going to basically reel back before August 1st. The China deal isn't really a deal. It's more of like a temporary agreement that still has tariffs on both sides. And I doubt, like, even if they sign a permanent agreement, either side is really going to abide by that agreement. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.